Welcome to the Daily Brief, where I'll go over the highlights in the market for Monday, September 12th, and then briefly cover the important points for Tuesday, September 13th. And we had a pretty positive day. I must say that I was a little bit surprised. After the run up that we saw last week, we've got a huge economic report coming out on Tuesday with the CPI. I kind of thought that maybe things would be pretty quiet. We didn't have any economic news. Europe saw a nice little rebound, and then the US kind of picked up on that and ran with it. But to see a pretty big update ahead of major economic news kind of was surprising. At least it was to me. So, right at the open, we gapped higher and we were actually above R1 at 40.88. Then we quickly shot up to R2 at 41.10. As the day went on, prices then fell back down to R1, but then buying came in and we bounced back up to R2 again, and we remained near the highs for the remainder of the session and ended up closing right near the high. We were up 1.06%. Volume was just a tiny bit below average, and that could be some apprehension ahead of some major economic reports coming out. We have CPI on Tuesday, PPI on Wednesday, retail sales on Thursday, and consumer sentiment on Friday. And those are biggies. Then the fixation is, we're turning more positive with the technicals as we continue to go up. There are a few indications in our charts that on a short-term basis, we might be starting to get a little overextended to the upside, but doesn't mean that they have to stop right here. They're just starting to show a little bit of an extreme positive reading. But the fixation, barring anything else happening between now and the time the CPI comes out, the markets are just completely fixated on inflation and interest rates, and that's going to be led by what the CPI says on Tuesday. Then some comments. The buying momentum, it still continues ahead of major inflation data that's being released this week that I just mentioned. The dollar has been declining. And if we see that, if stocks are going to continue to go up, we're probably going to see some weakness follow through in the dollar. It's still in an overall uptrend, and it's still been doing quite well. But as stocks have been going up recently, the dollar's been coming down. The technicals continue to improve. And as I stated, we have some short-term overbought indicators, just meaning that they're into extreme positive territory. Our sectors and our setups, they're improving. And depending on how aggressive you are with those, you might use those as justification for going long. The 10 to the 2 and the 10 to the 5, those yield curves still remain inverted. Some of our inverse correlations are starting to shift as we're going from more of a negative environment to a positive environment for stocks. And that's showing a little bit of a shift with our correlations. Sentiment is now right back at neutral. We're at 49 currently with the fear and greed index, which is about as neutral as you can get. We didn't have any economic reports that came out on Monday. Our trend, it's turning positive. The green line has crossed over the red line on the ADX, but the two lines are still pretty close to each other. So the ADX continues to fall and it's below its moving average. It might end up falling below 20, which would put us into more of a trendless environment. With the up day, our bias is positive and the last number of days have been positive. So our momentum is still looking much better. So what's our outlook for Tuesday? The technicals are improving and turning positive. We have CPI and core CPI. That's why I have them highlighted here. Those are the biggies. We also have the NFIB small business optimism coming out. That's not a real market mover, as is the Treasury budget. And then the big thing, like I said, unless something else happens, is going to be inflation and interest rates. That's what the stock market is really worried about, and they're going to base that on what the CPI says. So our scenarios, we're hitting some resistance. Some of our indicators are still negative. We have all these headwinds that are listed here, so that could suggest that possibly, and a lot of our oscillators have not switched over to positive yet. So there can still be made a case for the market to go down because the technicals are showing a lot of improvement and turning positive. So you might not be real comfortable with the downside scenario right now. The up scenario, showing a lot of improvement in the short and intermediate term. Can this continue? Our scenarios are looking a little bit better and they're really showing some improvement. The technicals, we're regaining some moving averages. We have some resistance ahead of where we're at right now. And so you may be more inclined to latch on to this scenario, but what if there's a negative reaction to the CPI? What if we're really getting into an overbought condition and the market's going to be falling back? And sideways, right now we're still above 20 with the ADX, but that could fall and we could actually be focusing more on a neutral or sideways trend in the market. So our conclusion then is the S&P, it's turning more positive because of the up days that we've been seeing, especially in the short term. Intermediate term is turning more positive, but we're still below that 200-day moving average. So our long-term look is still negative. And I keep hitting the button and nothing's happening. There should be a thank you that comes up here. But anyway, I guess I'll just end the video for here without a thank you. So I'll just say thank you for watching this, and I hope you have a great night, and I'll prepare the next video after Tuesday's session.